Hello, this is Dylan Langei, branch manager and home loan officer and construction certified home loan officer at Evergreen Home Loans. I'm wearing my orange construction beanie today because if you're watching this, you are interested in a construction loan. It's also a rainy, cold Sunday, so I'm getting away with wearing a beanie into the office. So this is on our Fannie or Freddie one-time close construction loan. These can be used for manufactured homes or stick-built homes. The manufactured home guidelines are a little bit different. This is going to be on your stick-built home guidelines. But if you're watching this, you are curious on how to basically, get construction financing on a home if you're going to borrow less than the conforming loan limit. So right now in 2023, the conforming loan limit is $726,200 if you're not in a high-cost market. So if you go to Fannie Mae's website, you can pull up the loan limit. So you'll see here the base loan limit is $726,200. But if you go by county, you can look at every county in the United States to see what the 1 unit limit is, 2 unit, 3 unit, and 4 unit. And it depends on your county if you're in a high cost county or not. So let's dive into it. This is a super hot topic. I know a lot of people are looking to build homes. These are the program highlights. So if you watch anything, just watch the first minute of this video. If you need a deeper dive, I'm going to do that in the video. So, keep watching. So basically for EHL, which is Evergreen Home Loans, we have a 1% construction fee, which is 1% of the loan amount. That's your origination fee. $1,050 inspection fees, which will be for our third party to go out there monthly to inspect the property to approve the draws. An appraisal fee to pay the appraiser, $350, which is for the appraiser to go back out there after the property is built to basically validate that the home is complete. $1,000 for title date downs, basically that the subcontractors are being paid. There's no liens. And then extension fees. This is a big one. So if you don't meet your 9 or 11 month construction term, it's 0.5% of the loan amount per month as an extension fee. So you want to make sure that you're hitting this 9 to 11 month construction term. We can do these on owner occupied or second homes. Max debt to income ratio is 43%, which means that your total debt, which would include the construction loan and any debt that's on a credit report, cannot be more than 43% of your gross monthly income. These are the minimum FICO scores, which is your credit score. Essentially, we pull Equifax, Experian, TransUnion. We use the middle score, and it needs to be above 680 or 700, depending on your loan to value. Detached, single family, and duplex owner occupied, and 1 unit second homes is what we can do these loans on. Can do it on a simultaneous purchase of a buildable lot. We also have lot loans, which I have another YouTube video on, which if you're watching this, I've got a lot of great YouTube videos. Make sure you check out my channel and subscribe. I do weekly videos on our loan programs and all that good stuff. It's a one-time closing. It's conventional Freddie Mac or Fannie Mae 30 or 15-year loan. Conforming loan limits only, which I showed you where to find those. Interest-only payments during construction. After the construction period, the loan converts to permanent financing. And one-time free float down once the project is 100% complete. So if rates drop, we can float down that interest rate. And then these fees, we already talked about those. Okay, let's do a deep dive. So this is 114 pages. This is why construction loans are so difficult. There's a lot of guidelines. I'm going to go through the highlights. This is not end all be all, but you can pause this video, play it quicker, rewatch it, whatever. This has got a bunch of great links of worksheets that I would need to send you that your builder would need to fill out. But let's jump into some of the. So once again, I'm going to go through each of these, but I've highlighted things that I want to talk about, but you can pause this and read it at your leisure. So just go through each page so that you can pause. So geographic regions, we can do these in Arizona, California, Colorado, Idaho, Montana, Nevada, Oregon, Texas, Washington, and Wyoming. All other states are ineligible. Okay, loan to value is when it's a purchase is based on the purchase of the land, site cost plus total construction cost, which is your acquisition cost or the as completed appraised value. We will go to the lesser of those two. Okay, if you acquire the land, we use the value reported on the appraisal. Ineligible improvements. So most improvements are acceptable as long as they're permanently affixed to the property. allowed by local jurisdiction and typical for the area. Eligible improvements, new construction, scrape off, tear downs, raised houses, remodels, renovations, additions, building addition structures, so ADU, garage, barn, shop, other permanent attached outbuildings, swimming pools, when typical for the area. Complete tear down and rebuild is permitted with demolition and removal costs included. Okay, construction period 9 or 11 months. Interest rate, we lock that when we close on the construction loan. But once again, we have that float down if rates go down by the end of the build, by the end of that 9 or 11 months, which is that float down there. Ineligible, no investment properties, no remodel or renovation loans, which this is a stick, but we do have a Fannie Mae home style loan, which will be another video on. So no condos, no 2 to 4 unit, no second home owner builder. So we actually do owner builder case by case on single family primary. Self-help projects where construction work has already started. Cash out refis, man homes are currently not allowed for Texas properties. So you can pause this and read through this. Recasting, so you can do a large principal reduction payment, at the end of the build, if you sell a house or something like that. I don't have anything here, but you could pause all of these once again. Pause all of these. Yeah, you can pause this. Nothing here. Nothing here. Nothing here. Nothing here. So pre-construction requirements. So these typical work that can be completed ahead of time are these items right here. Builder and contractor approval. So all work must be performed by a licensed contractor. So if you work in finance and you want to build your own home, we cannot do that. If you work at a grocery store, whatever it is, if you're not a licensed contractor, this is a no-go. Standard builder documentation is required. I have all the documents. Contractor must have a minimum of 2 years single-family home construction experience. We may not choose the contractor or refer you any contractor. So we have to be very delicate with that. These are some of the forms that need to be completed. Once again, I have these forms that I would be able to send to you. This is what we're responsible for. That's our construction loan department, CLD. So owner-builder transactions. Contractors or builders who are performing construction or renovation work on their own primary residence are reviewed on a case-by-case basis. That does not mean that we will approve every single one of these. That's a case-by-case. But they need to meet these. So the borrower has to be a licensed general contractor and not a specialty contractor. You cannot be a trim guy, plumber, roofing guy. You need to be a home builder and doing single-family residences. You also have to successfully have completed 3 construction projects with EHL. So building homes for other borrowers that we did the projects on. We did the loans on. Has worked with EHL in the last 2 years. Has all required licenses. And then has a conference call with our construction loan department. But you cannot do second homes if you're an owner builder, basically. Building permit will require the borrower builder provide proof that the applicable building permits are approved and ready for pickup prior to us sending out docs. So we're not going to close these loans without the permits ready to go. So you can pause this. This is a big one. Contract requirements. Fixed price contract is required. So you can pause this and read through this. This is what's exactly needed in your construction contract. What is not eligible for construction contracts? Cost plus, time and materials, supervisory, consultant, fixed fee, any of those. It needs to be a fixed price. We will build X home for this price. Okay. Nothing here. Contingency will require 10% of the total construction cost. So if the cost to build the home is $500,000, it's $50,000 unless the borrower has 6 months of reserves, then we will lower that to 5%. We will consider to lower it to 5%. And that is a EHL contingency. That's not your builder contingency. That's for Evergreen Home Loans. Change orders, we need to approve them. Construction inspections, we do them once a month when you do a draw, right? 1 draw per month. Draw amounts, you can pause this once again and read through this. You can pause this again. Extension, once again, past that 9 or 11 months, it's 0.5% of the loan amount. That's a big one. Make sure that your builder can finish the home. Final loan terms are determined when these items are done. Only primary and second home. Okay, those are the requirements for it. Pause. You can pause. You can pause. These are just about borrowers. Ineligible borrowers are right here. Multiple finance properties, we've got some rules around that, so you can pause and read through this. Eligible properties, so 1 unit detached primary, 1 unit detached second home. Ineligible, so read through these. These are ineligible properties that we will not do. So yeah, it can be off-grid, can be a farm or a ranch, can be on-frame modular construction or off-grid properties, units in condotels, units in condo projects, boarding houses, manufactured homes, bed and breakfast properties, properties that are not suitable for year-round occupancy. Multiple parcels may be allowed. Acreage, read through this on acreage requirements. I know that's a big one. A lot of people that build want good acreage. ADUs, these are the requirements for ADUs. You can pause this, read through them. Manufactured home ADUs, ADU zoning compliance, mixed use properties. So if you got like a daycare facility, barbershop, read through those. Leaseholds, if it's on leased land, there's some requirements around that. You can pause that right there. And these are about utilities. Utilities are huge. Access for roads, sewer and septic, read through that. Water testing, if it's not public water. If it is public water, read through this. Well water, right, there's some requirements there as well. Off-grid homes, that sometimes comes up. You know, I want to move to Montana where no one can find me. And then this is just all about borrower stuff, income, assets, credit. I think that there's nothing that I highlighted here. So I think the big one though with the borrower specific stuff would be if you own an existing home and you don't qualify with your mortgage payment, you either need to sell that house or rent it out, and you need to rent somewhere as well and prove that you're renting somewhere else. Your rental agreement can't go past the construction term, or we have to hit you with your current debt that you're moving out, you know, your departing residence. So let me know if you have any questions on that. That's a real high level view of our Fannie and Freddie construction loan for stick-built homes. I will shoot more. There's going to be ones on lot loans, manufactured home loans, manufactured construction loans, excuse me, and then jumbo construction financing as well. So, and rehab loans. So I'll see you on the next video, and maybe I'll wear my construction orange beanie again. All right. Thanks so much for watching. Make sure you subscribe to the YouTube channel and check out my other videos.